Hello friends, good week, and this is the weekly review for 12th of September 2011. First of all, before we begin with our forex things, I would like to empathize with all our US friends in such a sensitive day. We are all with you, and I wish no one will ever feel and know such terrible thing as happened 10 years ago ever again. And all my hugs, all my love just from here to all of our US friends that some way somehow connected to this event. And now back to the forex world. During the weekend we have had a G7 meeting which promised to do all they can to help Europe and all any other players that might have any financial issues during this sensitive period. Will that be enough? Well, I'm not plenty sure. I don't think that the market will actually react to these decisions from G7, to these words, to this G7. I guess that all the market will be waiting for Bernanke, and until then it should continue with its trend. The dollar is getting stronger, or should I say different way, the euro is getting weaker with every currency pair. Let's take a look on the chart and see the opportunities we might have during this week. First of all, euro dollar. As you can see, the weekly chart broke the trend line, broke the support area 138 and flat out well down. It is kind of, not exactly, but kind of equal tails, although they are not equal, but it's very strong candle. RSI broke finally the 50. We can see the Bollinger Bands are open, and the stochastic is very bearish on the weekly chart. It should be a beautiful and well considered as long-term sell signal. For the short terms, I do expect for corrections, although it's still early to look for them on the 4-hour charts. We can see it's one way down, but any retrace for the previous resistances around 138, for example, or even a little lower, 137.60, or even deeper for the 139.50, 140, should be considered as next good sell area. The next targets for the euro dollar for long run should be 135, even a little less. The next one would be 133, and the next one would be all the way for the 130. It should be the way of the euro US dollar. Now it should affect on each currency pair against the euro. Let's take a look, for example, on euro against the British pound. The investors were selling this pair a long time ago, but if we can take a look at the thing that happened during the last week actually made the signal. The support area has been broken. RSI crossed the 50. Stochastic looks like crossing the moving average down. The Bollinger Bands are open. If we take a look on daily chart, and we have interesting situation here, all bearish signs. This is the retest area. I think that because of this Marubozu, this pair should correct, well, something like 40, 50, maybe a little deeper, 60 to 70 pips, and continue lower. 0.85 would be the target. 0.85, the first, sorry. Then we have our 0.8470. We have 0.8370 for short-term targets. For long-term, it looks like we are going now all the way back to 0.80, the level that the investors are aiming. and it looks like very very logical with all the European issues, all the European problems, and it might be very interesting, very good trade. Once again, a retrace of 40 to 70, somewhere in between pips, for the resistance area, which was a support and has been broken during Friday, should consider as a sell signal. Any stop above the last candle, technically it should be above 20 MA, but to make it little lower, any stop above the previous high candle, 30-40 pips above, should be enough to protect of any correction and enjoy the ride down. This is the situation as for now. But once again, please pay attention that after G7 meeting and all the seventh financial ministers promised to fight for Europe and make all it takes for you to make sure Europe is still in a healthy situation, it might affect at the beginning of the week. I don't think it will affect for long run, but it might affect for the short term, and we should watch it and be aware of that retraces might be a little deeper than expected. Let's continue. We have many interesting things happening. The franc pairs, the bank promised they will not let the franc get so stronger again and again, but the life proved that each intervention is for short term. For long run, the market power is much stronger. Very interesting situation right now for the francs, as you can see. This is the trend line, the long trend line. You see that, right? From very highs. This is a stiff area, sorry, around 089, 090. I guess, and this is my opinion, that with this continuing divergence and riding above 80 RSI, which was not relevant during the intervention, but is relevant right now, this pair should begin its correction down. I think we are going to have something between 2 to 500 pips correction. That's my opinions. I don't think it's going to continue with the franc strengthening as for now, but until then it does look like we are going to have a very good correction. Let's take a look on another interesting franc pair, a Swiss against the Japanese yen. If you take a look here, we were discussing several weeks ago about this situation, remember? With this continuing divergence, we said it's only a question of time when it will happen, and it happened. That's the beauty of trading investing style. Remember the differences? So this is what happened here. Now we have had this strong breakdown, RSI, Bollinger Band, MACD, everything bearish, but retrace should happen first, at least for the resistance around 90. Maybe it will be even deeper. If we take a look here, these are our support area. We have here the first support, here the second support, right? It should go and stop here in between and complete some very nice correction. Of course, I don't think it will be one day, but this is going to happen probably during the next days / weeks. It should stop here in between and begin its correction. If you take a look on 4-hour charts, it looks pretty much the same as the dollar franc. Now it is sitting on support area. RSI is and stochastic is divergent, and it should begin the correction, or from here or from the next support area, which will provide once again somewhere in between 2 to 5 here hundreds pips possible correction. Aussie Canadian is the next pair I would like to discuss about. This is a beautiful channel on 4-hour charts. Let's take a look on bigger charts. We have here a divergence, as you can see, which means this pair should begin its down move very soon. If it will continue from here and successfully close above 105, it will lead us for a move for 109 approximately, and then crash all the way down. So stay tuned for this pair. Why I showed you the beginning the 4-hour chart. This is a beautiful channel. A break below this channel on 4-hour chart will lead also for a break of daily 20 MA with possible cross of RSI, the 50 level. And this will be a beautiful bearish signal. If it does happen, you should go and aim for a deep down move with 103.50 as first target, the short-term target, but the longer target should be much lower. 103 will be another intraday, but for long run we are going to have 101.50, 102 as target. Or if it will break this target down for long run, I will not be surprised if we will go all the way back to 098, the amazing support, which also will meet us, believe it or not, might meet us on the trend line, as you can see right here. So I am bearish for this pair as long as it holds the 105, 20, 30, that's the range. This stiff resistance area, as long as it holds, I am very bearish for this pair. So stay tuned for any possible very soon serious long-term short move. Once again, if it holds above 105, about this resistance actually, we are going for 109 approximately, maybe 110, and then this divergence will take effect and crash down. I doubt that it might rise, but market is market, everything could happen here. That's why I said stay tuned for any possible move here. Dollar yen, one good friend of mine, Igor, offered this interesting pair as the long-term divergent, stochastic divergent, RSI divergent, as rising up. I must agree, and I think we are going now for 20 MA of the weekly chart. Let's take a look on the daily chart. The daily is still fighting this resistance. If it will break this resistance and we have close above, then definitely we are going for our next resistance area. As for now, we have also a trend line here that makes some difficult lives, right? A break above this resistance area, possible trend line, should take us up. 79 plus will be at least the next target, and I will not be surprised if we're going to 80, 81 once again. It looks good. The Bank of Japan promised to intervene for any case if things happen, so this pair should rise up. Let's take a look on some more interesting things. The gold, which provide us some amazing stochastic divergence, should go down for the correction. It will not be one way down. That's why I suggest take a look on the daily chart. You have a beautiful trend line here with a 20 MA together, the dynamic together. A break below this line, a close below a retest should provide amazing sell opportunity. It looks like a beautiful double top. If it not manage this situation, we are going to have a wedge before the crash down. The gold reached, as for now, its top, and now it will probably play here in between. For long run, of course, gold will continue up, but the correction is a must situation here, and it will happen for sure. The only question is when and how, and as you know, the gold knows to make the moves. We have been from live room here this week for a squeak down move to squeeze some short profits, but for long profits it is still we're still looking for a break of this line at 20 MA. Let's take a look on indices to understand what's going there. We have an interesting situation here. It's not exactly a triangle or something like that, but this line should be broken for this to continue down, and I assume that it will happen close to Bernanke I believe it's only question of time, because I think the S&P must go to 1000. This is from my point of view. I might be wrong, but this is from my point of view a natural area, natural level for the S&P in these days. So I think that once this line will be broken on the daily chart, we are going for 1000 all the way. So friends, it's of course S&P affect everything, and everything looks like just the same. So stay tuned, friends, as it might be very interesting situation. The pairs of the euro probably will rock the most. The franc pairs also are looking good for corrections. And well, about the yen pairs, all depends of the yen itself. The pound yen hold the 123, as you can see. The euro yen broke the resistance, the support area. Now it's aiming lower, and I remind you that the investors aiming 100 area, right? So it still looks good, and it should continue down. Thank you very much for watching this video, friends. Once again, my empathy with the US friends, and well, just hugs and much love from here. And I'll see you again on the live room this week, friends. Last week was very nice with the gold trades mainly, and let's take a look for the euro page this week. It looks like we're going to have some interesting stuff there. Thank you very much for taking the time to watch this video. I wish you an amazing week. Yours, Vladimir. Bye bye.